Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Sealing the deal. Global stocks gain after easing US inflation makes a September rate cut all but certain. We look ahead to US retail sales, UK growth data and results from Walmart. Chinese stocks find support with signs of life in the consumer sector as retail sales pick up. But infrastructure spending surprises to the downside, underscoring the economy's long-term headwinds. And hedge funds load up on Apple shares while trimming their holdings of Nvidia. We're going to break down the latest 13F filings. So the data is aligning for investors this morning. Stronger picture out of Japan, a jobs number out of Australia that looks more positive. And then, of course, the inflation dynamics in line when it comes to the picture in the US. Inflation heading in the right direction and certainly opening that door ever wider for that potential September cut. Also, the voices coming through from the Fed as well, whether it's Goolsbee or Raphael Bostic speaking to the FT, suggesting that FOMC members are aligning to a view that September could be go on the first cut. European futures then pointing to gains of 0.5%. Here in the UK, FTSE 100 looking to add 40 points as we await the GDP print out of the UK, 7 a.m. UK time. S&P futures looking to add 12 points after 5 straight days of gains, looking to build on that. Nasdaq futures pointing higher by 91 points. Let's flip the board and look cross-asset then. We look at the pound. We look, of course, at the Treasury moves. So far, Treasuries are relatively flat. They've digested the news in terms of the CPI, essentially coming in line with expectations, certainly in line with the view that you can still move in September. 396 then on the 2-year at the front end, where that's what a lot of the movement has been. The pound at 128, just up 0.1%. We'll see to what extent there's volatility there around the growth picture in the UK. Brent back below $80 about 79.93, and iron ore under pressure once again, down 2.2%. Let's cross over to Asia right now. Standing by for us in Singapore is Avril Hong with a deep dive on the Asian markets. Avril.
Yeah, Tom, those US CPI numbers helped to calm some of the fears for Asian investors in this part of the world. But we also had the Q2 GDP numbers out of Japan, and it was better than expected, boosted by private consumption. And this is what the Bank of Japan wants to see, this virtuous cycle where higher incomes fuels higher spending. And in theory, this reinforces a BOJ that could come through with more of a hawkish stance. And we're seeing some selling in bonds, a bit of strengthening, firming in the yen versus the greenback. Stocks in Japan are also pairing gains of upwards of 1% from earlier on in the session. But from here on out till next week, where Governor Ueda actually appears in Parliament, we might see it in a bit of a holding pattern, these Japanese assets, especially given how, as some of our strategists have pointed out, he could sound a bit dovish to appease politicians. Let's take a look at what we're seeing cross assets in China as well, because we got a lot of data out of the largest economy in Asia, and this showed to some that there were signs of life returning, that there was a bit of a pickup of the recovery because the retail sales number was better than expected. Separate data showing home price declines easing, but if you look at the property investment, that showed that further contraction. Fixed asset investment also not doing well, so it was a bit of a mixed bag. It's interesting though, if you take a look at the reaction on these mainland stocks, the CSI 300 is well in the green. And one possible explanation for it, that the board, is what we're seeing on the national team activity potentially. The onshore ETFs that usually get a lot of attention from the national team saw a pickup in activity right after the data actually dropped. So some ways that goes to explain what we're seeing in the stock market as well. Tom.
OK, really interesting in terms of the dynamics of the national team coming to play in China. Once again, we've seen it many times before, haven't we? Avril Hong in Singapore with a deep dive in the Asian markets. Thank you. Let's stay on the China story then, because Chinese equities are higher today, as Avril outlined for us, with official data showing retail sales picking up and a modest easing of those falling home prices. So home prices continue to fall, but at a less severe rate than previously. There was also a surprise slowdown in investment. Our China correspondent, Min Min Lo, joins me with some of the details to break down the data out of China and how it sets us up in terms of our thinking around the policy response. What for you then, Min Min, stood out from this data set?
Yeah, it's quite a mixed data, and what's clear is we still see this two-track recovery going on. The retail sales was slightly beat estimates by 0.1%, coming in at 2.7%, but this was aided by very favorable base effects. And you have the summer travel season helping to lift sales of services. But if you break down that data a little bit and dig into the details, you will see that home appliance sales, car sales, those are declining in July. So the big ticket items, people are still holding back spending. If you combine that with the unemployment numbers increasing by 0.2% this month, 5.2% is the total unemployment. The government says that is because of the influx of new graduates entering the job market, and a record nearly 11.8 million students entering the job market this season. So you have that fears around unemployment, around income that is holding people back from spending, and then industrial production slightly missing estimates, 5.1% this month. That is again a worrying sign because it's the fourth consecutive month of industrial production growing at a slower pace now. You have the Tyson manufacturing PMI contracting for the first time in 9 months, again pointing towards headwinds when it comes to export growth, especially with the US economy slowing.
And Min, part of the support measure coming through from policymakers in Beijing is government bond issuance. And again, this is a tool they've reached for in the past. What do we know about their plans around this, how effective it's likely to be at a time as well when we're seeing pretty remarkable interventions into the bond markets by this government?
Yeah, there's been a lot of movement in the bond market recently, and the projection is that the government is going to nearly double the issuance of government bonds to about 1.4 trillion yuan this month. That's up from 780 million yuan the previous month. So that's going to go some way to maybe inject more stimulus into the economy, because remember we had that very, very weak credit growth numbers that came out yesterday, the first contraction in 19 years when it comes to new loans for the real economy. And also today's fixed asset investment data also missing expectations there, and traditionally government-led investment and those bonds have been a key source of infrastructure investment that made up for the shortfall in private investment and property investment. And at the same time, as you mentioned, the PBOC has been in this battle with traders trying to cool the bond rally, and the issuance of more bonds would likely go some way to lift the yield curve a little bit. But then at the same time, it would increase the risk for those rural commercial banks who are some of the most aggressive buyers of these bonds, some of them with more than a quarter or even half of their assets in these bonds. And that's why you have local authorities stepping in, telling these smaller rural banks to stop purchasing these bonds. And it looks like these banks, they're torn between chasing that rally and trimming their position, because right now there aren't many alternatives. The Chinese bond market has been outperforming the global markets, but then when you look at stock market and also property, that's not where you want to put your money in, and interest rates are so low, it's cutting into the profit margins for banks as well.
OK, Bloomberg's China correspondent Min Lo breaking down the data and the government response to some of the economic challenges that continue in China. Min, thank you very much indeed. Staying on the China story then, and yes, we have seen those property prices falling less dramatically than some had expected, but that infrastructure component is a surprise to the downside, as we said. That ties into what's happening with iron ore, and you can see prices currently below $94 a tonne. This is the lowest level that we've seen for iron ore since 2022. That's the session picture then, intraday down 2.2%. It's another day of downside for this key input into the global economy. And of course, China is the biggest consumer of iron ore. That gives you that terminal of the chart in terms of the context. So a drop of around 30% for the year in terms of iron ore prices. China's steelmakers talking about a crisis, and we know that they have cut output. Output is about 10% lower from China's steelmakers than it was last year. And again, it ties back to the real estate sector that has not found a bottom yet in China. This happening at a time, by the way, when miners are actually boosting exports. So that is reflecting in terms of the pricing around iron ore, worth focusing once again on the basic resource space, particularly when the FTSE 100 opens for trade at 8 a.m. UK time. But iron ore under pressure once again. Now, underlying inflation in the US has eased for a fourth month, keeping the Fed on track to lower interest rates next month. Let's get more then from Bloomberg M-Live strategist Mark Cranfield. Mark, so the CPI seems to line up, seems to lock in that September cut, something that you've been talking about for quite some time. You were very early in terms of flagging a potential jumbo cut from the Fed in September as well. Meanwhile, it seems we're getting FOMC members turning a little more dovish. Raphael Bostic talking to the FT saying essentially he's open to that cut in September. Goolsbee as well saying his focus is right now on the labour market. What do you make of all of this?
Well, yesterday we were talking about traders thinking this was like a Shakespearean play, but today it's a Beatles song, The Long and Winding Road of Rate Cuts. So if you look at the derivatives curve, it's probably 200 basis points now worth of rate cuts priced in all the way to next year. Traders are convinced that once the Fed start, there'll be no stopping. Rate cuts are coming down and down. And what the Fed people are doing here is they're making sure that there's going to be no margin for error. They're telling the traders, yes, you're absolutely right. We are going to give you this rate cut, so don't panic. And that's probably partly why you've had a relatively small response so far to the CPI data, considering how important it is. But then there are plenty more pieces of data to come even before the Fed meet. So you take that into account, the amount that's already priced into the market, and you can see we're getting towards September. There's going to be almost no chance of them derailing that. But as you mentioned, there's still a possibility that 50 basis points. Now, the Fed won't want to get boxed into a situation like the RBNZ where they discussed 50, although they went 25. They'd much sooner tee everything up and get everybody on the same page and just do their quarter point. But we do have another jobs report to come. We'll get some indication from the claims later today. But as you heard overnight, Goolsbee was talking about employment being the most important factor now. It's no longer inflation they're most concerned about. It's deterioration in the jobs market. The jump to 4.3% unemployment was a shock. And it could go even higher before they meet again. So now the biggest piece of data is the September jobs report. And that's still a couple of weeks away.
It is. And as you say, look, before we get there, we have the jobs claims out today. We have the retail print as well out of the US. Do those data points take on added importance then, given that shift in focus from inflation to the labour market? What are you expecting to see from that data?
The traders are certainly going to be more focused on the jobs claims because last week it came out slightly stronger than expected. We saw yields back up a little bit. They've since recovered. Treasury market yields overall are slightly lower than they were a week ago, but it did cause quite a bit of disruption in the market at the time. The retail sales, of course, is important and people are slightly concerned about the consumer, but they're much more concerned that if people are losing their jobs, they won't be able to buy much anyway. So certainly, if there's going to be a market reaction today, it will be off the claims numbers. And then, of course, people will be extrapolating and saying, what does that mean for the US employment report coming down the road? In between, we have a PCE report to come as well. And Bloomberg Economics are saying that everything is moving in the direction where the core PCE, the deflator that the Fed likes very much, will hit the 2% target they've been waiting for some time. So all the parts are moving into place. The data today is not going to derail the fact that we're all going towards September. Rate cut is very much likely. But the question is, how much of a rate cut? And the next couple of pieces of data will determine whether the Fed gets their way for 25 or do they have to go bigger.
OK, so we watch those jobless claims and whether or not that soft landing scenario and theory remains intact. Bloomberg M-Live strategist Mark Cranfield, thank you very much, as ever. Here's what else to be thinking about today, then. 7 a.m. UK time. We've been talking about the US data. We switch focus to the UK data at 7 a.m. because GDP will drop. So we'll see to what extent that ties into a picture of relative resilience here, posing something of a conundrum for the Bank of England, arguably, as markets price in the next cut coming through in November. That data, of course, could adjust that view. 11:45, we do have the earnings crossing from Walmart. It is the biggest retailer in the US, Walmart. So a gauge, once again, on the health of the consumer and to whether extent there's more caution trickling into the US buyer. So those details crossing later, and we will bring those to you, of course. 1:30 p.m., meanwhile, we get the broader picture on retail, with those retail sales crossing 1:30 p.m. US retail sales, again, of course, an important gauge on the US consumer. Coming up, mediators hope a new round of Gaza truce talks can ease those tensions in the Middle East. But with Hamas representatives not due to attend, what are the actual prospects for a deal? We're going to get the latest. That is next. Plus, South African mining company Exxaro has just released first half earnings, reporting a drop in operating profit. We're going to speak to the chief executive later in the show. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, mediators from the US, Qatar and Egypt are set to meet with Israeli negotiators later today in Doha in a fresh attempt at striking a Gaza ceasefire deal. For more, let's bring in Bloomberg's EMEA News Director, Ros Madsen, who, of course, follows all of this very closely for us. Ros, what is the likelihood of any deal, or at least moving towards a deal, given that Hamas will not actually be attending these talks in Doha?
Well, the pressure is on, but it's been on for many months, and we've seen many rounds of these talks, and they've gone nowhere. But we are getting a real push this time again from the US, from Egypt and Qatar. And Qatar is interesting, of course, because they're sort of channeling the messages to and from Hamas. Hamas doesn't attend these talks, but Qatar, does have those inroads with Hamas. In fact, Israel has accused Qatar occasionally of sort of slightly representing Hamas. So they will have some voice in the room, at least, in the conversation, but it does make it more complicated because you've got to pass messages back and forth through conduits. Of course, the head of Hamas is in hiding, in Gaza somewhere and can't be at the talks. So we may not get hard news today. At least we'll get a sense of where the conversation's going because, of course, the key sticking points are still there. Israel still has its sticking points. Hamas has its sticking points. It's very hard to see how those can be bridged, but can we get to the point where at least, for Israel to say we need to get to this ceasefire because it may just stave off some sort of attack pretty soon from Iran?
Yeah, and this, of course, after Iran accused Israel of assassinating that key negotiator on the Hamas side. What are the key sticking points at this point then, Ros?
Well, the main one is, what does this ceasefire achieve? Where does it go? Hamas wants it to be a pathway to ending the war in Gaza. Israel wants the option to resume fighting, says its ultimate goal is to eradicate Hamas, to prevent Hamas from ever attacking Israel in the way that it did back in October. And it doesn't want this to be binding it into, the end of the war. It wants the option to continue fighting. That's the main sticking point. There are many other sticking points. What about the hostages? What are the arrangements around the remaining Israeli hostages that are being held in Gaza? Where do the Israeli troops go? How far back do they need to pull? What about returning more civilians in Gaza to the north of Gaza? Can they move? Will Israel say, well, you've got Hamas potentially moving alongside them? So it's a bunch of complications there. The main one, though, is the ultimate thing of what would this ceasefire be a pathway to?
Is it realistic to think that if there is progress in these talks today, that would ease the risks of Iranian retaliation against Israel?
Well, certainly it seems like Iran's waiting to see potentially how these talks go, but they've been saying for 2 weeks, more than 2 weeks, that they have to do something. This was an attack on a senior Hamas official in Tehran just after the new Iranian president was inaugurated. It's highly embarrassing. So they've been saying they have to do something. Obviously, they're trying to work out what that is, but maybe, if the talks go well, it's a different kind of response. Maybe it comes through proxies versus a direct attack on Israel. Maybe it's a cyber attack on Israel versus a physical attack on Israel. So maybe these talks will play into the nature of the response. But it does seem as though Iran still feels they have to do something.
OK, Ros Madsen, thank you very much indeed with the latest, of course, as we look ahead to those talks in Doha later today. Consequential, potentially, for that region in the Middle East, of course, and the tensions that remain. Ros Madsen, our head of EMEA News, of course. Now, Russia says it has repelled a wave of Ukrainian drones and missiles in one of the largest overnight attacks of the war. Moscow says 117 drones were shot down over almost all border regions, as well as a region east of the capital. Ukraine says its forces continue to advance, meanwhile, into Russian territory as Moscow rushes reinforcements to the Kursk border region, where Ukraine says it has seized control of more than 70 towns and villages. Plenty more coming up. We're going to switch focus. We're going to get details on the Securities and Exchange Commission in the US levying more fines on financial companies for the use of WhatsApp messages. We'll bring you the details of that story and a number of others. Stay with us. This is Bloomberg.
We're moving in the right direction.
I think it's pretty good news.
The economy is still strong.
Inflation is decelerating and full steam ahead for the first rate cut on September 18th.
If they want to cut rates, they're probably going to cut rates in September.
The market is leaning towards 50.
I don't think anyone should hold their breath for 50 basis points.
If they do a 50 basis point cut, it will probably spark an unnecessary concern in markets that they know something that we don't know, or something's happening in the economy.
We think 25 is the right first step towards easing policy.
Our base case remains for a 25 basis point rate cut in September.
If I'm the Federal Reserve, I want to try to get back to normal here, because the risk of recession, I think, is greater than the risk of any resurgence in inflation.
OK, recent guests weighing in then on the latest US inflation print and, of course, its implications for monetary policy as the debate shifts now to whether or not the Fed goes 25 basis points or 50 basis points in September. The assumption is September is essentially locked in at this point for the first cut of the cycle for the Federal Reserve. Now to some other stories making news this Thursday. Columbia University President Manoush Shafik has resigned after a brief, tumultuous tenure that saw the head of the prestigious New York University grapple with protests over the war in Gaza. She is now the third leader of an Ivy League school to depart over turmoil tied to the conflict and accusations of anti-Semitism on campus. The US Securities and Exchange Commission has fined 26 financial firms almost $400 million as part of its WhatsApp probe. The fines add to the billions that big banks previously agreed to pay the SEC to settle similar investigations into the use of messages on personal phones and WhatsApp. And Citi is lifting the cap on its top London bankers' bonuses, allowing some to earn up to 6 times their base salary. The latest move applies to Citi's material risk takers. It follows similar moves made by Barclays and JP Morgan, though material risk takers at those firms are now able to earn a bonus that's as much as 10 times their base salary, after changes, of course, by the UK government. And Bloomberg understands that Klarna Bank is close to selecting Goldman Sachs, of course, to lead its US IPO next year. The potential move comes as a Stockholm-based lender is in talks with investors for a sale of existing shares that would come before the proposed flotation. Sources have previously said that Klarna had considered seeking a valuation of around $20 billion in the IPO. That valuation well down from previous valuations, of course, for that business. And Bloomberg has learned that Apple is ramping up work on a home tabletop device as it seeks new sources of revenue. We're told a team of several hundred people is working on the product, which uses a thin robotic arm to move around a large display screen. It's envisioned as a smart home command center, video conferencing machine and home security tool. Coming up, South African mining company Exxaro reports a drop in operating profit in the first half. We will be speaking to the company's chief executive. That is coming up next. European markets, futures pointing higher by 0.3%. S&P E-minis also in positive territory, pointed gains of 0.2% after 5 straight days of gains for the S&P 500. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Sealing the deal. Global stocks gain after easing US inflation makes a September rate cut all but certain. We look ahead to US retail sales, UK growth data and results from Walmart. Chinese stocks find support with signs of life in the consumer sector as retail sales pick up, but infrastructure spending surprises to the downside, underscoring the economy's long-term challenges. Plus, the World Health Organization declares an Mpox outbreak in Africa a global health emergency. That as it seeks to contain the potentially deadly virus. OK, to the markets right now. European futures pointing higher by around 0.4%. It was a decent session, of course, stateside. 5 straight days of gains for the S&P and looking to build on that today with US futures also pointing higher by just shy of 0.2%. of 8%. The upside coming through, the data aligning with a constructive view on these markets, and Fed speak as well, from Goolsbee or Raphael Bostic to the FT, suggesting that he would be comfortable with that first cut of the cycle in September. The CPI, the inflation print, of course, aligning with that view, cooling on the core level, certainly in the US yesterday. And again, open that door wide for a September cut from this Federal Reserve. The FTSE 100 looking to gains of 30 points as we look ahead to GDP data out of the UK at 7 a.m. UK time. S&P evenings, as I said, pointing higher by just shy of 0.2%. NASDAQ futures also up by 0.4%. Let's flip the board and look cross asset. The pound in focus ahead of that GDP print, of course. Later in the US, we do get retail sales. And then, of course, the key retailer, the biggest retailer in the US, which is Walmart, a gauge of the consumer, of course. 395 on the front end at the 2-year. We'll see if that moves as markets price in and the debate moves from whether or not it is a 25 basis point cut or 50 in September. 128 on the pound, $79 a barrel on oil, below $80 a barrel again. And iron ore under pressure again in the session, down 2%, $93 per tonne currently for iron ore on continuing concerns about the demand out of the Chinese market. That's a check of your markets. Let's get back to another key story right now. This Thursday, the World Health Organization, the WHO, has declared an Mpox outbreak in Africa a global health emergency. A mutated strain of the virus has infected about 15,000 people in at least 6 African countries and killed more than 500 in the Democratic Republic of Congo.
WHO has been working on the Mpox outbreak in Africa and raising the alarm that this is something that should concern us all. The emergency committee met and advised me that, in its view, the situation constitutes a public health emergency of international concern.
Bloomberg healthcare reporter Janice Coope joins me now from Johannesburg. Janice, why are we seeing this in Africa now? What do we know about the spread of Mpox?
Mpox is endemic to Africa. It's the only continent where it is endemic. And when the last global outbreak of Mpox was happening in 22 and 2023, Africa got no vaccines. And now we have seen a more virulent strain that is the endemic strain. It's mutated and it is spreading. It's started in Central Africa and we're already seeing it in East Africa. They are still scrambling to get data and good surveillance to know what they're dealing with.
So what are the global risks at this point from the spread of this virus?
Well, it's low, I guess, but as we saw with COVID, you shouldn't turn your back on something like this. It can spread very quickly. As I mentioned, it's already spread to East Africa, and it takes one person on one flight, and it's gone global. So the WHO are acting quite quickly. So is Africa CDC. They declared their version of a continental emergency the day before, and it is being taken seriously.
What is the material impact of these declarations of emergency? What does it mean in terms of the resources, for example, that are put to play to try to combat the spread of this virus?
It certainly marshals resources. The WHO is meeting today and in the coming days, and they're going to detail a more comprehensive plan. At this stage, they can't really force any of the member states to do anything. And, as we saw with COVID, there's often stockpiling. Many of the countries most severely affected in this outbreak don't necessarily have the same resources to pay for vaccines that many of the other countries in the world do have. And so there's going to be a lot of discussions. There needs to be a concerted effort. And hopefully this time Africa will not be left behind.
OK, so some estimates that possibly $4 billion is needed to kind of combat this virus. Janice, give us some details in terms of how dangerous this virus is, which parts of the population are most vulnerable, and the efficacy of the vaccines that are currently available.
So the efficacy is pretty good. It was developed for smallpox, which has largely been eradicated globally, and it will cover, the makers are pretty confident it's going to cover any mutations. The populations most at risk, lot of the cases have been in children. And we are seeing a rapid spread through sexual networks. So there is that element as well. This clade is, as I said, the endemic clade, and it's usually a more deadly clade. The case fatality rates in the DRC is about 5% at the moment. And the outbreak that happened in 22 and 2023 globally was a different clade that had a lower case fatality rate.
OK, Bloomberg Healthcare reporter Janice Q on the really important details around this unfolding story. Really appreciate the update and the details. Janice, thank you for joining us. Right, switching focus, and coming up, hedge funds reshuffling their positions in big tech. Yes, we have those 13F filings. We're going to take a look at why they're picking Apple over Nvidia. That's next. This is Bloomberg. Good morning, welcome back. Now, underlying US inflation eased for a fourth month on an annual basis in July, keeping the Federal Reserve on track to cut interest rates next month. The data showed year-on-year core consumer prices rose at the slowest pace since 2021. For more reaction, let's bring in Santander CIB UK Chief Economist Victoria Clarke, and we'll get your views, of course, on the UK on a big day for this nation as well, with GDP crossing at 7 a.m. UK time. But let's start on the US then, Victoria. Your take on what we've been seeing. The inflation picture seems to be aligning then with that September cut from the Federal Reserve. The debate seems to be now whether they go 25 basis points or 50. Where do you land on this question? Would 50 smack of panic? Is September now locked in for you and the team? And what is the sequencing going forward?
So I think yesterday was important. You know, the fact that we had that really bad run of US inflation numbers, we think that we've now probably had enough good numbers. So we think that September's on. But we're also struggling with the notion that the Fed's going to kind of jump straight in with a 50 basis points. So I think, look, our view is that it's not a completely done deal even on the 25. But certainly if there is going to be a move, it should be a 25 basis point, not a 50 basis point adjustment. OK. It's interesting. Parts of the inflation basket, when you break it down, some of the consumer goods, particularly big ticket items like cars, falling quite significantly, suggesting that the US consumer is feeling that pain. What would hold them back then from not going 25? Because you're saying there's still a bit of caution as to whether or not they do actually go. Well, look, I mean, the payrolls numbers are volatile. Obviously, we've got another number to come. There is still some residual heat there in bits of the inflation basket. So I think, we need to see that reassurance that the jobs market is as weak as we all suspected last month. I think if it is, then yes, they can get going. But, we need to know that that's not 1 month's fluke. Yeah. And I think I agree with you. We do think that the consumer is softening, consumption is softening, and that the US is moving on to a softer path. But that's more soft landing. We're not in the realms of seeing that there's a big slowdown coming. It's more of a moderation in our eyes. So I think that would lead you towards 25 being a much more sensible move. And, 50, I think it does scream of panic. But it also risks, restoking that demand that's been softening nicely. You want to go carefully to make sure that you've really kind of dealt with the inflation beast.
Goolsbee of the Fed coming out and saying that he is more concerned about the labour market than inflation. We had Raphael Bostic speaking to the FT saying he is open to a September cut. The labour market of the US, 4.3% unemployment. How vulnerable is the labour market to deep cracks, or is there relative resilience there?
I mean, I think there's resilience there. Look, as I say, the view that we take is that there is a slowdown on, but it's not a sharp one. Consumption is slowing, but, it's slowing in a contained way at the moment. So provided that you see that, you wouldn't expect to see a sudden sharp drop. In the labour situation, we've had a decent run of growth. I think that at the moment, our sense is that it's that the Fed still has an inflation battle to deal with. Yes, there is some softening coming through, but you've got to balance those two things out, and that requires a measured response.
UK GDP today, what are you looking for? What resilience is there in this UK economy?
So the UK economy looks like it's had a really quite resilient first half of the year. So we had, plus 0.7 over the first quarter, and we're looking for the same for the quarterly number for this period as well, for the next 3 months, the second quarter. So, at face value, that looks great. I think it overstates the extent of strength there for the UK because we had such a weak end to last year. So some of what you're seeing is just the bounce back from that difficult end to last year. But look, nevertheless, it looks positive. And if I look at the signals for this summer, I mean, unlike the US where we're worrying about a slowdown, I think if anything, you can see that post-election, there's a little bit more positivity coming in.
Interesting. And you talk in your notes about the Euros, so the sporting effect, but of course, inevitably as well, the Taylor Swift effect. Are we over-exaggerating the effects of some of these inputs?
I think we are. So in terms of inflation yesterday, I mean, Taylor Swift yet again cited as one of the reasons why hotel prices were soft after a very strong month before. I'm not convinced that that's a Taylor Swift effect when you look into the detail of hotel prices. For GDP, I think I'm the same sort of picture. Yes, I think, it is a factor. More broadly, there were a lot of shows on. I mean, if I look at the list of kind of artists that were doing the rounds in the month of June, it's fairly substantial. You had the Euros as well. So I think it's more the opportunities out there for people to spend. And frankly, a bit of normal weather as well, which we haven't had much of this year in the UK.
The construction industry, in an environment where rates have come down from the BOE, the first cut, and we know that takes time to come through, is the construction industry on a more sure footing at this point?
I think construction is feeling a little bit more positive, yes. So look, they've been massively weather impacted through the first part of the year. So again, good weather seems to be one of the most important factors driving these GDP numbers. But you have seen, including in the PMI surveys, which we had for the last month, those signals that having got through the election with rates, now on a downward track, that there is that greater optimism there. So I think, let's not get carried away, but it's a more positive outlook than we've had for a little while.
OK, you're quite constructive then on the UK economy. You see 0.7% growth coming through later today when that GDP drops. We know that inflation rose above 2%, the 2% target of the BOE, but less strongly than many economists had expected. You put those two things together. How challenging is this in terms of the next steps for this BOE? Where do they land in terms of their next cut?
I think the BOE is going to look at it and think, fine, we're more or less on track with the way we saw things in August. They would have had a 0.7% GDP. Yes, they've had a bit of downside news in inflation, but there's lots of volatility in the numbers. Services CPI was lower than they thought, but they've got to step back and look at the bigger picture. Services inflation still above 5%, pay growth is still elevated, and there's work to do. So we viewed that August cut as, a cautious, right, we've got inflation at target. We had it a month ago at target at least. We can do a step. But I really don't see them rushing into it. I think they'll be quite measured in responding to the data. And again, if services inflation jumps back up next month, as we expect, I think that'll add to the caution. Those numbers come just a day before the BOE. Your
base case is not that the Fed goes 50 basis points in September. But should they go there, would that affect the BOE? Would that pull forward expectations that September would come into play for the BOE?
I think the Bank of England will want to do its own thing, right? It will want to step back and look at its own numbers. But look, if the Fed launches into an aggressive cutting cycle that's vastly different from that we see for the BOE, it's going to be difficult for them to continue to solely run their own game. Look, the UK's got growth momentum picking up a bit. It's still got more services inflation. It's got high pay growth. So it has got its own story. But I think, look, if there's the panic there that's needed to probably trigger the 50 basis points, then the BOE is going to pick up on that sort of panic.
How strong is the UK consumer at this point? Households, budgets?
So, consumption's been a little bit of the kind of boring story. Look, it did OK in Q1. It's not barnstorming. It's not super weak. I think you'll see probably a similar picture for Q2. I would say consumption is exactly where the Bank of England wants it. And if they fiddle too much with interest rates or, fiscal policy later in the year, the risk is that comes back too strongly. So I think they've got to be quite careful in managing this now, because we don't want demand to suddenly jump up as financial conditions loosen and, growth roars off and inflation roars even more.
OK, right now we're looking at arguably then a Goldilocks consumer environment in terms of where it wants to be positioned for the BOE. Victoria Clarke, thank you very much indeed. Chief Economist, of course, Chief UK Economist at Santander CIB. Here's what else to be watching out for today. 1:30 p.m. UK time. We're going to get those US initial jobless claims. Mark Cranfield and the team at MLive have been underscoring the fact that this is an increasingly important data print, of course, as members of the FOMC target the labour market and the unemployment picture in terms of their focus, arguably a little bit more than inflation right now. So that data will be in focus, of course. We also get retail sales out of the US, another gauge on the health of the US consumer. At 2:15 p.m. UK time, it's US industrial production. So that's another segment of the US economy for which we will get more colour. And later today, the Fed's Muslim and Harker speak at events, so more Fed speak as well, as we heard these relatively dovish comments, arguably from the likes of Goolsbee and Raphael Bostwick speaking to the FT. And before the market, on the earnings side, a couple of big Chinese names on the consumer side. E-commerce, Alibaba, JD.com, and then, of course, in the US, the biggest retailer of them all, stateside, Walmart earnings crossing as well. So another touch on the US consumer. Now, hedge funds have continued to buy into some of the biggest tech companies, including Apple, while trimming positions, intriguingly, in Nvidia. That's as they reshuffle their positions in the AI boom that fueled a blistering rally, of course, in the US stock market. Let's get more from Bloomberg tech reporter Annabelle Drulis, who's been passing the details of these 13F filings. What are the big changes then, Annabelle, that you've seen?
Well, passing the details, yeah, Tom, I mean, there's about 670 companies or hedge funds that have so far offered up the changes that they made in the latest period. And really the big theme that's come through, and one that you just touched on there, is that shift into Apple, which I think is particularly important because if you recall, just a couple of weeks ago, we had Berkshire Hathaway, for instance, out with its numbers and pointing to that trimming that it had made in its stake in Apple. Perhaps it could have been for tax accounting reasons, but it certainly does seem that there's been, again, that change and that shift into Apple shares. The stock itself was up 25% in the latest period. Net buying of more than 8.5 million shares from hedge funds, Janus Henderson, Third Point, a lot of different ones. At the same time, as you say, there's been that shift away from some AI-related themes. Nvidia, for instance, stood out, and there was that trimming or perhaps profit-taking from some of the different funds out there. Microsoft as well, that was cut or reduced by about 140 investors, as we continue to see that boost into other names like Amazon, for instance, TSMC. That's what came through in the numbers so far.
OK, maybe some profit-taking then. Michael Burry, meanwhile, famed hedge fund manager, of course, making his name during the great financial crisis. Also doubling down, intriguingly, on Chinese tech, which sounds a little counterintuitive, or might be to some.
Yeah, it's really interesting, actually, because Michael Burry, of course, as you say, someone who was famous for betting against the US housing market in 2008, he actually shifted completely out of his China tech holdings at some point during 2023. At the start of this year, he started to buy up in quite a big way. Names like JD.com, Alibaba. In the latest period, his stance has actually shifted again because JD.com has now slipped in his holdings. Alibaba has risen to the most or to the biggest holding for Skion Asset Management. Again, it is interesting because, as I said, he's exited away, he's come back in, but there's still so many valuation concerns around Chinese tech companies. And I think Tencent's a really good example today, because even though we saw an earnings beat coming through, that stock has been really under pressure throughout the session today. But certainly in Wall Street overnight, it was down around 3.5%. And just taking a look at how Tencent's trading now, and you're still off 1.5%, Tom.
OK, Bloomberg's Annabelle Drulis breaking down the details from these 13F filings and what it means for exposure to tech. Thank you for the update. There's plenty more coming up. We're going to give you a deep dive in terms of what to expect from those Walmart earnings, why it's such a great gauge on the US consumer, and looking ahead to retail sales as well. Stay with us. This is Bloomberg.
Everybody's waiting for September, and if the rate cuts that are expected materialize, that'll be a boost for the consumer. The thing that gives me confidence beyond the next quarter or two is this almost sociological shift we've seen with this appetite for travel, and I think that bodes really well for our business.
OK, Marriott CEO there, Anthony Capuano, talking about the prospects of a rate cut in September, which looks almost certainly locked in at this point for the month of September. The debate really about whether you go 25 basis points or 50 basis points. But a gauge on the US retail sector, with that data dropping later today, will point to some details around whether or not the theory and the thesis around a soft landing is still intact for the US economy. You can see the strength that came through in terms of retail sales and the relative choppiness that's come through year to date. The expectation is it's going to see a pickup from a flat print last month to an increase of 0.4% in terms of retail sales. Again, an important gauge alongside, of course, US jobless claims later today. An expectation jobless claims will tick up, but the retail sales picture is expected to improve. That takes us to Walmart. Let's flip the screen and look at Walmart, which is still the biggest US retailer by revenues. And Alice will be looking for anything they say on the health of the consumer, any switch up in buying, are they going for cheaper products, are the volumes being reduced, and anything they say on inflation as well. This is what's expected in terms of revenue growth year on year. You're expecting a tick up of 4.2%. But as I said, it's anything executives say around inflation and around changing consumer habits that will be interesting in terms of how you think about the resilience of this US economy. Let's flip the board and have a look at just where Walmart stands in terms of the strength and the size within that retail space in the US. It still does have the crown in terms of largest revenues as a retailer. But interestingly, Amazon is expected to take that crown by the end of this year. And Walmart pushing back with some other objectives in terms of expanding into other businesses to try and offset that challenge from Amazon, including a third-party marketplace and an ads business. But that's the size and scale of Walmart in terms of the retail space. The challenge coming through from Amazon. The stock, by the way, for Walmart is up around 30% year to date. Coming up, Vestas signals a jump in wind turbine orders 2 days after a profit warning related to a different part of the business. We're going to speak to the CEO of that company, 7:30 a.m. UK time. The opening trade is coming up. They're also going to break that detail around the GDP data here in the UK as well. Just in the next couple of minutes. Stay tuned for the opening trade. Up next, this is Bloomberg.